Hello, everyone, and welcome to this webinar in the afternoon. Today is Tuesday, the 22nd of November, middle of the trading week, I can say. And so far, I don't know, for those who participate in the morning webinar, if we have some people in this group. Raquel, of course, I should thought about that. Guys, I hope everyone is having a fantastic day so far, wherever you are in the world. I believe if you are somewhere in UK, still early afternoon. If you are in Australia, I don't think so. You are here. You must be sleeping. Almost forget. Hello, Mark. Good afternoon from Belgium. Guys, can you kindly let me know where are you based now? We have people from UK, we have people from Belgium. That would be interesting to see. There are lots of people in this webinar. Come on, just tell me where are you watching us? If you want, but if you don't want, we can understand it. All righty, so ladies and gentlemen, we continue the trading psychology series, and actually I got really nice feedback from you guys that you see lots of improvement, especially after some people start doing this exercise we said last time, and it helped a lot. So I'm very happy for that. Just to make sure we all are aware about the disclaimer, and just to read out loud that this content is for general information only, not intended to provide trading or investment advice or personal recommendation. By saying that, we move on. For those guys you first time join us here at Admirals, we are a CFD broker and Forex. We offer thousands and thousands of instruments to trade and invest to. We have support in many languages, so trust me, whatever it's your native language, we have people that they can assist you along your trading and investing journey. Multiple license from SciSec, from FCA in UK, EFSA in Estonia, ASIC in Australia. Now we got the Canadian license, we have South African license, and some other as well. We try to keep our spread as minimal as possible, especially when we do intraday trading or when we trade some instruments that they have low volatility. That helps a lot. So low liquidity at some times, or the average true range, let's say for the which one, the New Zealand Canadian dollar, it's not that much like the Euro Kiwi, for example. So on average that make 150 pips a day, but the New Zealand Swissy, New Zealand CAD, it's going to make, let's say, 50, 60, 70 pips a day. So every pip, it's very important. And ladies and gentlemen, you can access our trading and investing instruments through the MetaTrader platforms. But of course, you can download them on your mobile application. If you haven't done it, so please make sure you go on your App Store, Google Play. It's a great way to monitor your accounts. And of course, not anymore MT5. Ah, okay. Yeah, in Russia. Thank you, Remy Lewis. Yep. Thank you so much for mentioning that. In not in France, not in Russia, you are able to download the MT5. So in Europe, whoa, oh my goodness. So you make sure you download our native app, so you can definitely be able to download it and trade. And anyhow, your market analysis, you can do it on another platform. Doesn't make any difference. So in regards to the weekly trading podcast, I say it all the time. It's one of the best tool to use, in my opinion. Not only because I do the podcast. I'm joking, guys. For those who haven't have the chance to listen to them yet, I'm just letting you know that on a weekly basis, every Monday, usually I record and I upload the podcast in about 4-5 minutes. I go through the major events for the week and I explain how they can affect your trading expectations and everything related to that content. Okay, so it's worth listening to that. And then the second question maybe it's, okay, Theo, so where do we find this podcast, right? And you are very right. So let me just get the link and share it with you. Or better, if I can just show you on the website, right? So we go to analytics, premium analytics, weekly trading podcast. We scroll down and here it's Spotify, Apple Podcasts, and the rest. Or you can just play it from here. Feel free to share it with friends and family. They can get information about what's happening in the financial markets in general. And as I always say, you don't need to be a trader to know that tomorrow, let's say, in New Zealand, the Reserve Bank of New Zealand wants to increase interest rates almost by 1%. They're going to explode above 4%. So this can bring a lot of interesting new things in the world in general. Okay, or about the FOM FC minutes they're going to hold tomorrow night. So things changed now. So it's good if we just listen to some just basic worthwhile news. So let's go back to the PowerPoint. And for those who haven't followed us on Instagram yet, please make sure you do so. And at this stage, it's good to go back and show you where you can find. So Admirals Global, here it's the page. Why to follow us here? Well, you can get a lot of stories and reels on a daily basis, plus many informations about what's hot, what's not on the market, some stocks, ideas, trading explanations, and it's a great tool. The next one, it's the YouTube channel, of course. Most of you subscribed and like the videos we do on YouTube. Some of you not yet, so please make sure you do it. So, and here, Trading Spotlight, you can find all the recording webinars we uploaded. Also, if you here it is, if you haven't subscribed from our website to the live trading webinars in the morning on a Monday to Friday daily basis from 7:30 a.m. to 8 a.m. GMT time, or my local time 9:30 in the morning, I do live market analysis, and we have some trading opportunities there and there. We take them. So it's good to engage yourself with that if you have the time. And trust me, you're going to get many, it's going to fast-speed process your trading career from here. And ladies and gentlemen, the last one I would like you to know about, it's the Telegram channel. Now we have the option of the comment. There is a comment option. So we post many things about market updates, about trending ideas, trading and ideas about trending markets, how can some news events can affect your trading. So please make sure you engage yourself with that one too. I know at sometimes it's a feel boring for you guys to hear the same things, but there are people who came to us for first time, so it's great to also inform them about what we do here, right? Now, as for myself, for those who haven't had the opportunity, yes, to see me before, no good. I'm joking, guys. So my name is Theo. I'm trading and investing for the last 10 years. I have a master's in physics. When it comes to investing, I usually take a long-term approach. When it comes to trading, it's going to be either swing trading if the market environment allow us to do so, or it's going to be intraday trading on the 5-minute chart, sometimes on the 15-minute charts. And that's okay. And here at Admirals, I'm a trading educator and investing educator. I write the courses, I do the live trading for you in the morning. And soon we are in the process to start uploading, to start recording officially the first beginners trading. So we're going to replace the zero to hero with some more updated and up-to-date content. And of course, in a different way, in my way, in my style, that I believe it's going to help many of you. Okay, so what's for today? We're going to see how the market moves. Okay, Theo, we do know how the market moves. What else to see? Yeah, you do know how the market moves, but do you do what you have to do, or you just know after you recognize the move 1 month later and you say to yourself, oh, I saw that was in an option, why did I start selling on the retracements and I didn't wait to buy with the uptrend? Well, that's human behavior, and that's what this webinar is going to help you to acknowledge and how to solve this trading issue. And of course, we need to stay disciplined with our trading. If we have a trading plan, we have to vigorously follow our plan. If we don't have a trading plan, I'm going to help you to have a plan. Okay, I give you my trading plan. I give you my trading checklist, methodology all the time, every single day. I mention about this stuff. So just pick up something, guys. Now, as usual, what did we learn from previous webinars? As I said, this is a series of webinars. It's a trading psychology series. Even if you watched it before, if you haven't had the chance to watch it, I'm not saying that if you didn't watch the previous one, you won't be able to understand what we're going to say today. No, but if you watch the previous one, it's going to help you to get better into the trading psychology fundamental stuff. Okay, guys, just give me 1 second, please. I'm sorry for that. We learned from previous webinars. First, we talk about how to think in probabilities. Now, what's important and why it's important to think in probabilities as traders? It's crucial because some trades will win, some others will lose, and we don't know which trade is going to be the winner, which trade is going to be the loser. And I find out that traders, they have a really hard time to accept, first to acknowledge, and then to accept the fact that, let's say, I'm in this euro against the US dollar currency pair. All right. And I have an uptrend. And let's say I recognize that this is an uptrend. Here I have a trend line. And I know that if the price is going to come somewhere here in this intersection, it matches nicely the previous swing. So the previous resistance can act as support, and it matches with a trend line. And if I draw FIP from 0 to 100, somewhere here I can be on the 50% or 61.8% retracement of the FIP area. So, and what's happening when the market comes all the way here? we buy. But the trend is not established, let's say, the way we thought it's established. And the market is just pushing lower and create a new low, and then it turns to a downtrend. So we had a losing trade here. One trade, let's say it was the first trade and it was a losing trade. What I find out is that traders next time, when they see this exact pattern on the same currency pairs, let's say we trade Euro USD on the 4-hour chart. And then after a few days, we find the same opportunity arises. Let's say the market make like this, it came down, and we are here now. I find that traders, they don't trust their trading process. They don't trust, and correct me if I'm wrong, guys. Sometimes you don't even want to believe that this pattern exists in front of you, and you hesitate to put the trade on and to call this, to put this buy order. Okay, same currency pair, same time frame, two different days, the same pattern. The one time the pattern won, and the other time the pattern lost. So because we don't know which it's going to win, which it's going to lose, that's why we say we have to start thinking as traders from the probability perspective. Okay, and that's a new thinking, the new approach, and the method I'm challenging you to adapt in your trading and your investing as well, but especially in your trading. So here I created an example. I said that, let's say 20 trades. We're going to risk on each trade only 2% of our account. So if I have an account of £2,000, I'm going to risk £40 on each trade. But we said we're going to make an experiment on a demo account. And we said that if every time I win, I want to have a take profit in place, that it's going to be twice my my initial bet. It's going to be twice my 2% risk. So every time my trade will be initiated, I will have an entry here. I will have a stop loss on to lose £40 if the trade goes against me, and I have a take profit, double the distance, it means double the amount, to £80 every time I win. So when I win, I will double. When I lose only the 2%. So when I win, I will make 4%. Is it clear? I hope so. Okay. So in this trading experiment, I assume that this 20 trades produces only 8 wins and the rest 12 were losses. But the first was a winning and the second. The third and fourth were losing trade. The sixth trade was losing trade. The fifth was winning. The 7 win. 8, 9 lost. 16, 17, 18, 19, 20. Guys, all these trades, they lost. Okay. But in 20 trade sample, the 8 won, 12 lost. So this system, this is wrong here. This system produced 40% winning ratio only. So if we take this to 100, we have a percentage of 40% winners, 60% losses. Okay, Theo, so how can we make money out of that? What, we win less than we lose more trades and we're going to make money out of that? Of course, that's what risk management is about, ladies and gents. So based on our example, 8 win, 12 losses. So I make twice my risk every time I win. So I am 8 times 2%. Sorry, 8 times 2, it's 16. So I make plus 16, and when I lost only 12 times plus the initial risk. So it was only 12 here because I make double the distance. Okay, so I risk 2%, 2% in both occasions. So plus 16 times 2% I risk per trade is plus 32, minus 12 plus times 2% is minus 24. So if I have a trading system that wins only 40% the time, I am always with 2-to-1 reward to risk. I'm always above in profit. So even if you have a system that wins less time, you will still be profitable if and only if your target is at the least double your risk. That's what risk management is about. Risk management is not things I'm going to show you later. Guys, I'm going to take a bit more time here, okay? Because for those who want to understand this, you're going to see great results. Trust me on that, okay? And for those who are going to apply it, all right? So if this is so simple, where is the problem and why traders, they just don't execute this? They don't do it. And in my experience, it's because they never learned this way, how to think in probabilities. All right. So now we know what to think in probabilities. How are we going to do it? So first, we have to understand the law of randomness. What do I mean by that? There are two things: that the outcome between wins and losses is random. The first trade was a winning trade. The second and third was losing trade. The fourth was winning trade. The fifth losing. The 18, 19, 20, the 16, 17, 18, 19, 20 trades were losing trade. We don't know which going to be the wins and which going to be the losses. But also, we don't know when we replicate the same strategy, which of these trades they will win. Not only in time when they win, but also applying the same strategy. Some of them they're going to lose. So there are pretty much in just one sentence a total random distribution between win and losses. Okay, guys, total random. It's a random distribution between any win and any losing trades. So let's review the previous example. First trade was a winning trade, and second was a winning trade. The third and the fourth trade was a losing trade. Maybe the fourth trade, maybe this one here, was the exact same trend trading strategy. Like I saw higher highs and higher lows on the daily chart on the pound against the US dollar. And I had fib retracement with a trend line, with the support, a fib retracement, and price action pin bar, bullish pin bar. I took the trade, I lost. But here on the first trade, it happened to be the exact same replication of this pound US dollar daily chart, exact same methodology. I did the same trade, bullish pin bar, and I won 2-to-1. But 4 trades later, I lost. So we don't know if we're going to apply the same strategy, which times it's going to win and which time it's going to lose. But also, not only based on strategy, we don't know where the winners and the losses they're going to appear in general in our system. Okay, if sounds too complicated for you, just keep the first one. We don't know where the winners and where the losing trades they will appear within any sample trading. let's keep on. So trade number 6 lost. Trade 7 won. After 2 trades, they just lost. But here, every time I won, I make 2-1. Every time I'm losing, I lose only 1. So if I just stop here on the 9th, it's like 1, 2, 3, 4 times 2, 8. 1, 2, 3, 4, 5. 8 minus 5 and plus 3. And I risk 2%, so it's plus 6% overall my account. Then we have trade 10 won, trade 12 won. What if trade 10, 12, 14? So 8, 9, 10, 11, 12, 13, and 14. All these trades in a row, they lost. What happened within your head? How do you treat yourself? How do you talk to yourself? Do you say I'm a loser? Do you say I can't trade? Do you say I don't know how to trade? Do you start questioning your trading system? Most likely we are humans, but that's fine. But from now, we do have to understand that any trend trading strategy, on average, it gives about 50% probability of winning trades. So if we have a system that even wins less than 50% and it wins only 40%, so 40 out of 100 trades, and we still make a very good profit, we just need to leave our ego aside and to just accept that here we are dealing with probabilities, and we have to understand that there is probable outcome between any trade. Okay, what am I doing wrong? What do you mean, Raquel? Please explain that to me. I'm happy to listen and help. So, in conclusion of that, what to do in order to treat your trading like a professional trader and investor? First, you do have to accept that sometimes you're going to win in trading, sometimes you're going to win some trades, sometimes you're going to lose some other trades. So there is also the losses. It's a part of this business. It's not something you're doing wrong unless you don't have a plan, but they're going to happen losing trades in any trading activity. Then the most important thing you have to do, it's also every time you're going to get into a trade, you must aim for reward to risk more, at least 2-to-1. Guys, it's a must. If you don't aim for 2-to-1 and you close the trades when it's about to take, let's say you are having a buy order and you see that here it's your stop loss. Let's say you see the market just coming down and you get scared and you scratch the trade. Or when you see just a little bit profit and then, oh my God, it didn't hit, it went 1-to-1, 1.5-to-1. And it's coming down, retracing, and I'm getting scared and I close the trade to break even. All over the sudden to see the market is trading a little bit lower and then boom, it's just giving me the winning trade for a 2-to-1. You just interacting with your trading, and that's not risk management, a correct risk management. And here is where the problem is. It's to the people, they don't understand the word management in trading. When we say management in trading, risk management, it doesn't mean we start interacting with our stop loss and take profit. We just move it up and down and we decide while the market is moving. That's not our job. Our job is to do market analysis, to find high probability entries, to have a plan, and to simply put the trade and leave it. with a stop loss in place, with a take profit. Guys, that's what our job is. It's much, much more simple than what you put yourself into a position. It's much simpler than what you think. It has to be structured, and not only with discipline, but also with consistency. Because, yeah, we need discipline to do it, but we need consistency to go through this 20 trading sample exercise in order to feel that, okay, I trust it and I can do it. Guys, I'm giving you, in my opinion, the holy grail of trading. It's not a single price action. It's not a single indicator. It's the way you have to think, like in probabilities, as I just explained, and to aim for 2-to-1 every time and see what's going to happen. Okay. Then, as I already said, we stopped interacting with our orders. We identified an opportunity. We do have a buy order, a stop loss, let's say, and a take profit target higher than where we bought. We leave it there. We don't interact with our trading, and we let the outcome play. Yeah, but what if I lost? Well, let me explain that to you. Maybe you're going to win the first one, the second one, but maybe the third is going to be losing. Maybe the fourth is going to be losing. What? So what? Where is the problem? Maybe the fifth is going to be a loser trade, the sixth, the seventh, the eighth, the ninth, the 10th. So what? You know that with a good plan and implication of your plan, you're going to win at least 40%. Now, what if I lose 30? What if I win only 30%, Theo, or 35%? Let me share this with you. 35%, you're going to be on break even, so you're happy. But if you have a trading system that it doesn't give you above 40%, then you have to look at a different trading strategy. And what I'm sharing with you, the checklist I'm sharing with you, in my experience, it was giving me more than 55%, and it's giving me more than 55%. So I just apply that, and I don't interact with my trading anymore. Okay. And the last one you have to do is to stick for at least for a period of time with the same amount either of percentage or what you trade. If you're trading with $10, €10, 10 pounds, whatever, 20, 100, 200, 2,000, whatever it's the amount you trade. Okay, not because you have 2 winning trades in a row, you're going to increase your trading size. No, we don't do that. All right. We need at least 1 month to see some consistency, and then we start interacting and thinking in these terms. So guys, please keep this for now. Risk management is not moving our stop loss order and take profit order in trading. Okay, it's not when we see the market is moving a bit against us to close the trade. We do not let the probabilities play the way they have to play in this business. Okay, and every loss, as one of my mentors used to tell me all the time, the loss, it's like any business, it has expenses. So does this business also has expenses. And what is the expenses of this business is trades to be scratched, to be lost. That's it. Okay, we can't associate our worthiness as human beings with, if we win a trade, we say to ourselves, we are a winner. But if we lose a trade, even worse, we say to ourselves, oh my God, I'm a loser. It's good to say you are a winner, but it's not good to say you are a loser. And not any trading outcome determines your value as person. Okay, it's a very thin line between these guys. Trust me, I went through all this stuff. I'm trading. I believe I'm trading much more many years than anyone participating on this webinar. So it's normal that I went through all this. I learned, I went ahead of the game, and here I'm in front of you and trying to help you to achieve the same results. Okay, I have a question here on the Q&A. Karim, sorry, I just see your question. Karim, I think you were on the live trading today. Yeah. Please try to put, guys, your questions on the webinar chat so I can read them instantly. How do you know the winning rate of a strategy? If somebody trend trade and trade breakouts, I mean, if somebody used trend trading and candlestick setup, it will change every time. Yeah, a strategy, it's a set of rules. Okay, I will answer it live. So Karim, and for everybody else, a strategy, it's a set of rules. It's like we identify the market that, let's say, it's in an uptrend. So, and I said that I have a strategy to execute uptrending markets, and that's it. I want to see first, I have it written down, I want to see the market making higher highs and higher lows to confirm that it's in an uptrend. Then I want to see retracement take place. It means the price to decline. And I want to, so that's the second thing, I want to see retracement, of course. And then I would like to see some sort of confluence factor around important areas of support, because I want to buy low and to get out with profit at higher price. So which are the confluence factor in this example here? In the currency market, usually a fib retracement will occur around 50% and 61.8%. Healthy trends retrace that much in the currency market usually. And most of the times, this fib retracement, it's going to match with either a previous swing broken or a trend line or a moving average. It has to be at least two factors of confluence with these indicators, either a fib with a moving average or a fib with a moving average in the last swing, or any minimum two, maximum whatever. Okay. And then you go one step ahead further. If you are trading candlestick patterns only, you want to see the best candlestick patterns in terms of reliability. That's the bullish engulfing in an uptrend and the bullish pin bar. All right. So you replicate this, and candlestick patterns, they have better accuracy on the higher time frames. So you replicate this 20 times, do this and see the results for yourself. But always you go for 2-to-1. You can't go 1-to-1, because if you go for 1-to-1 and on average you win 50% and you have losing trades 50%, then you are just break even. We don't want that. We want to be ahead of the game, right? So what's the psychology now behind the trending markets? And we say that trending markets are the easiest markets to trade, but unfortunately, many traders, especially at the beginning, they are blowing up accounts on a strong trending markets because they have the tendency to trade the retracements. Why is that? Does anyone experience that, ladies and gentlemen? Please, if you don't mind, just engage a little bit on the chat box, because it's a difficult feeling to just sit behind the screen. You have someone with broken English, literally like myself, making all the blah, blah. Okay. And at this stage, I don't know who is sleeping on the office, on the desk, who is just having maybe a barbecue outside and they just have the voice playing. I'm joking. Okay. So if we don't make some kind jokes here, guys, it's going to be very boring, right? So come on, let me know on the chat box below. Please type something and let me know. Have you ever experienced this fact to identify a trend, an uptrending market, and you find yourself, instead of, let's say we have this, come on, oh, sorry guys, I've done something here with a PowerPoint. Let me just bring it back. You see, sometimes my excitement Okay, from here. Just 1 second, guys. Okay, here we are. So, chat, does anyone experience this this factor? You know that you are in a trending market. The market is going with higher highs and higher lows, and right here you think A, B, C, D, and then you say to yourself, okay, enough, it's enough, I'm going to sell. And you find a nice bearish pin bar here and you are selling. And then you say, I'm not going to put even a stop loss order because the market it's went so much up, and definitely it's time to push lower. And you leave the trade open. You are losing, and then you are getting frustrated, emotional, and all this stuff. Has anybody experienced this tendency? Yeah, Karim, they have this tendency to shape tops and bottoms, but rarely happens. The trend has more chance to continue than to bend. So yes, go with trends. Yep, definitely. Christine, yes. Guys, I'm really thankful that you are opening up and you are just honest with your answers. I appreciate that, and really I want to make sure that I will help you to open up to these questions and say something, because that's going to be the first point for your turn, the first turning point. Okay, let's say it better this way. So what's happening in an uptrend from the psychology perspective? We see that we have a move here upwards, then a decline, and then we see an impulse move. You see this is longer than this one, stronger, and we identify two things. The first, we identify that we have this swing here, and that's a support. Before it was a resistance. Now in a retracement it will act as a support. And then what? Then we have to be alert, and here we have to wait to see the price comes here and get us in a trade, right? So we see this retracement and we want either to have a buy limit order, or we want to see price action confirming that this move to the downside, it's over. So if I see here a bearish candle followed by a strong bullish reversal signal, I definitely would like to buy this market, right? And that's where we buy. Either just blindly because it's support, we execute a trade with a buy limit order. In my opinion, it's nothing wrong with that. Okay, I do it all the time, but also I do a lot of candlestick patterns like the bullish engulfing around here, because it shows clear dominance by the buyers. And then we see the trend continue. All right, so what's the point? And we see this interaction here. Why do we see that? It's simply because this is a level that many traders that are coming from higher highs and higher low trading school, or they come from the FIP school and they trade only FIP school, or they use only the Elliott wave theory and they identify that here, this is a good area to buy. And there is lots and lots of volume coming in and attracts the traders' attention, this area, because it's a significant point if the price comes here and stops. And that's where we want to buy. Okay, then I'm going to explain you in a while why do traders, they get in here and not here. Okay, let's have a look the opposite in a downtrend. Market is trending to the downside. At this point, we identified that the market is to the downside trending. Now, what do traders do? Unfortunately, they think that they missed the move. They think that that was the only move in the market. They think that the move is over, and they start buying here. But what you want to do from now on, what you want to do, you want to identify this as a new market structure. You want to identify this as a support that it's been penetrated and it's going to change role, and on a possible bounce, it's going to act as resistant. And what do you want to do? You want to mark this resistance in your chart, and you want to execute trades around this resistance, either with a sell limit orders, either with a bearish reversal candlestick chart patterns. Market retrace, if you draw FIB from here to there, you're going to see that we are about in the 50% retracement area. And it's a confluence between, okay, this is a textbook example, right? I just make it in order to make sure that everything matches, all right? So here we have the last swing, we have resistance. It's going to be a significant resistance because recently it was a support that been broken. So what do we want? We want to see some type of reversal candlestick here if we're not going to go just with a sell limit, and we want to sell it. And that's what you should and what you want to do, ladies and gentlemen, from now on. Do we have a deal? Do we agree to treat uptrends and downtrends with only the appropriate signals? I hope the answer is going to be yes from everyone. Okay. Now, let's see the other side. We are in an uptrend. Okay. Traders, we see this impulse move to the upside. What do? We do the opposite thing of what we supposed to do. Or traders, I don't do it anymore. So traders, unfortunately, they do the opposite thing of what they suppose that they should do it. And what is the opposite thing? Instead of acknowledge that this is an impulse move of a strong trending market, they take it as a threatening move of two reasons. The first, they say to themselves that they missed, they missed out of this trade. That's what they said to themselves. Oh my God, I missed out. But hey, guys, how can you miss out in a trend development that you didn't have the technical support and the clues that this will be a trend development? You didn't know that. Now, if you are telling me you didn't participate here or there, yes, you missed out because we need 2 points to draw a trend line or EMAs, whatever. And the third point is tradable. The fourth is tradable, and so on. So you cannot miss out on something that it wasn't observed, not because of lack of technical skills, but because the market wasn't developing as a trending market at the stage you saw that. So what do traders should do? We said what they should do. Here it's the support, and they say to themselves, oh my God, I missed out on this trade. Right? What should I do now? What should I do? Markets, as we say many times, misleading. They see this bearish pin bar candlestick here, and they say, I found it. Here it's the end of the uptrend. So this trend, that's what they say, this trend came to an end. All this now finito. I'm sure it's a word in some language. Okay, definitely it's not in Greek. So they say that this trend is finished. But actually, this trend hasn't finished yet, didn't come to an end. This trend simply shows that it's about to retrace. Then they see a strong bearish candle here, red candle, and they say, oh my God, this is the best market. This is a downtrend. It's not a downtrend. It's a retracement. Do we care if the retracement is going to be in a sideways move or the retracement it's going to be in a one candle or two candle move? Do we know? Do we care? Or should we care? Why? If you get bothered by the colors of the candle, change it to bar charts maybe. Change it to other colors. Do it black and white. Do something that it doesn't interpret as a threat to yourself, guys. Guys, trust me, I know what I'm talking about. And I know that many of you, you are saying to yourself, I do that, I do that. Just please, let's step up and let's change what we used to do. And it doesn't match with the results we want to have as traders. So when we see this pattern here, we don't take it as a threatening pattern, as a threatening situation in our experience. We have to take it, and of course not as a trading signal, right? We have to take it as a way that market is telling us that it's just retracing. It doesn't do anything else, it's retracing. But unfortunately, many traders, they initiate trades here, they enter. And most of the times in my observation, they don't even include any stop loss here. They don't put stop loss here. There is no stop loss. Why? Because they feel so sure, unlimited amount of certainty that this market is in a downtrend. And at some point, maybe they get confirmed, red candle here. Oh my God, I'm all in. Let's add more to this position. Open one trade here. They don't even count how much they risk here. They don't care. They maybe put one lot in the case that they should risk 0.2 lots. They don't include any stop loss. They see the market comes here, penetrated within the day and leave with a bullish pin bar. And they say to themselves, it's just a bullish pin bar. It's fine. They don't even take the market signal as a red flag to get out of the trades. And the market just moves to the upside. But why the market is moving to the upside? Hello, it's in an uptrend. Where do you want an uptrending market to move, guys? To the downside. In an uptrend, of course, right? So the market came here, retraced, keep moving upwards, and leaving many traders with all these feelings of frustration. Is it necessary to have these feelings in our trading? No, it's not. So why do we have it? Because first, we don't have patience. And second, we have fear that we missed out on some trades. All right. Let's examine the second occasion. In a downtrend, market creates this lower low. Then we defined our resistance here. But traders, what do? They see a bullish pin bar here and they think that this indicates the beginning of an uptrend. So they say to themselves, hey, listen, I know what's happening here. This downtrend, it's over. There is no downtrend. And now it's time to get into an unlimited ride. There is no unlimited ride in trading. Yeah, we all know that. when the market comes here, they don't even close their positions. Okay, sometimes we get into these retracements, but we have to understand that the overall trend is down. We had many examples, if you guys remember, from the Euro US dollar lately. If you watch the webinars in the morning, I had many people, they were saying, I'm buying, I'm buying, I'm buying, but it was in a downtrend. Why do you want to buy in a downtrend? Why don't you want to go with the momentum? It's like just paralyze it with a surfer. You want to go, you're gonna do surfing, but you want to go with the waves. If the waves they go like this, and then you are trying to surf like that, what you're gonna just harm yourself, right? Maybe you're gonna break also your surfing boat. Yeah, reversals are the riskier and most difficult setups to trade. Absolutely. Sometimes they just give lucrative outcomes, but on average, it costs so much psychological damage to the trader. So what we'll do from now on, we're going to see retracements, and yeah, maybe, guys, a reversal will start from a retracement. So maybe this is going to just create a new high. And you're going to say to yourself, oh my God, I missed this out. That's not how trading is. You have to wait to see if this is going to be a reversal. Yeah, you're going to wait for a retracement of the market. Anyhow, it's going to retrace. And then you just go with a trend. Okay. But traders, they have these two, and write this down. They have these two emotions. They have the fear of missing out. And always, if they are in profit, they have the fear of missing out on their profits. If they are if they are not in a trade, they have the fear that they missed out the trade and they got just jump on the trade. No, trading requires discipline. Trading requires understanding of risk management, exactly what I explained you with 2-to-1, and understands that we are not the market movers. And as we are not the market movers, we have to be smart, not only in other subjects of our life, but also in trading. So we have to be smart and say, hey, this is a downtrend. I'm going to wait. All these people, they just express their emotions. Let them just buy here. And I'm going to be smart and monitor what is going to happen in this area. And I would like to sell. But if the market is going to just shoot to the upside and I don't sell, that's okay. I'm going to change my strategy, and I would say, okay, I was looking to sell. Now I see higher highs. I'm going to look to buy. Simple as that. We have to just keep it as simple as it is, not to try and complicate it. All right. So, ladies and gentlemen, we came to an end of this psychology trading webinar. I hope you gain really a lot of value. Okay. And I want to make sure that you're going to start implement something in your trading. Please make sure you write it down, your plan. Just start practicing what we say. Watch this webinar again if you have to. Okay. Yeah, better to have written rules. Karim, totally agree. Sorry, Karim, I didn't read previously because everything was on the Q&A and I just opened it now. Apologies for that. As from now on, please make sure you write it on the chat. I really like your processing thought and everything you see. It looks to me that you know what you're talking about. I appreciate that. And I'm sure that you stick around and you're going to see by far better results than what you want. Okay. So, ladies and gentlemen, I wish you to have a lovely evening, lovely afternoon, wherever you are in the world. Some of you I know where you are, some others I don't know where you are. Okay, please make sure, leave your feedback. I will really appreciate everyone in this webinar to leave a feedback so I can have the chance to, with the team, to read them later. I will appreciate that. For those, I will see you tomorrow in the live trading webinar in the morning. I will see you tomorrow. For the rest, I will see you next time. Guys, thank you so much and have a great, great afternoon. Bye for now.